Hi guys, happy Friday to everyone. This is Daniel Eigenmann here for the Daniel Eigenmann Broker Forum, and today I want to talk about how to save on taxes, and more specifically, if you are an investor, if you have investment properties or you're looking at investment properties, there are options available for you to save on your taxes. Taxes are not related to investment property, and because it's a fairly specialized area, I wanted to talk to an expert in tax depreciation, Christian of Asset Reports. Thank you for being on the show today.
Yeah, pleasure,
and I'm going to ask Christian a few questions. He knows a lot more about it than I do. I know what the benefits are. I know how my clients can benefit, but let's hear it from an expert. Christian, thank you very much for being here.
Yeah, thanks, Daniel.
Christian, so what I want to do today is talk about tax depreciation.
Yeah,
all right?
of course.
It's one of those things that half or more than half of investors don't take advantage of.
Yeah, you generally find that probably about 70 to 80% aren't claiming their full entitlements. So,
but is that because they don't know about it, or they don't understand what it is, or?
There's probably people think that maybe the property is too old, or their accountant's looking after that for them. But the reality is that sometimes they do think their accountant's looking after them, but they might be missing out on thousands of dollars each year on tax deductions. So,
yeah, I mean, my experience is that a lot of people actually don't know about it.
Yeah.
Or if they don't understand, they don't think they need to take the time to talk to people about it. So that's what we're doing about. We're actually doing the talking on your behalf.
Yeah.
All right, so let's start by actually defining what tax depreciation sounds like. Really complicated, sounds like a technical term, something that as a simple investor I wouldn't understand. Can you explain to us in simple terms what it is?
Yeah, well, it's pretty simple, really. It's just the write down of an asset. So claiming the loss on that asset, in this case the house, as a tax deduction. So obviously, although we want our property values to go up, reality is that the property gets old, and we work out how that property gets old through from the construction through to ovens and carpets and light fittings, etc.
So the cost of the depreciation every year can be, claimed against your taxes, and therefore reduce the actual tax you end up paying at the end of the year.
That's correct, and obviously then you get to claim that loss as well. So, and that can carry on for up to 40 years for
all right. Okay, great. Okay, cool.
Yep.
So who would be the ideal customer for a tax depreciation schedule?
And pretty much anybody who's looking to invest, really, Daniel. So,
so existing investors or someone looking at buying an investment property, they should actually take tax depreciation into consideration as well?
Yeah, each person is probably their portfolio and reason for buying is different from everybody else. But I always look at the tax benefits there from option A. One house can prove more viable than probably the next one. So I always sort of take that into account when doing your finances.
Okay.
I guess.
Okay.
So,
all right.
Yeah,
Okay.
Yeah.
So if someone is looking at, and I do pre-approval for clients, and I always recommend a pre-approval will basically determine your borrowing capacity. So you have an idea of how much you can pay for a property, but obviously different properties will have different benefits. And one of them obviously the rental income, but also the tax benefits. So if they wanted to, they could have a chat to you.
Yeah, of course. We do free assessments, so we can do something over the phone for you.
So I could call you if I'm looking at two properties, A and B. I could say, hey, Christian, I'm looking at two properties, and you could give me an idea of which one, from a tax depreciation point of view, would be better than the other.
Yeah,
you could.
Yeah, and that's a free assessment. We can do something over
which
the
is
phone.
great. I mean, that's only one criteria.
Yes, that's correct.
In deciding which property is best.
Yeah.
And remember, really, that how you decide which property is best is really up to you. It really depends whether, at what stage in your life you are when you're investing, and what's important to you. Is it capital gains? Is it tax benefits? Is it cash flow? All that kind of stuff. So again, you can have a chat to me about this, but you can also have a chat to Christian to work out which of the A or B or C properties are best from a tax depreciation point of view.
Exactly.
Now, obviously, the benefits are, and you made it really, really clear, tax deduct or reducing the overall tax that you will pay.
Yes.
Can you give us a couple of examples of what you've done recently, what benefits you've been able to achieve?
Yeah, so we inspect anything from small apartments to, we do stuff for shopping centres, rural abattoirs, absolutely.
Okay, so really any type. It doesn't have to be
Yeah.
The mum and pop residential property. It could be any type of income producing investment property.
Exactly, and they're the key words. Income producing.
Yeah,
that's
so
right,
basically
that's
the ATO allows you to deduct the cost of depreciation on any income producing assets.
Exactly.
Wow, that was a mouthful, wasn't it? But that's the main point. That's the main point. Thank you very much. One of the misconceptions that I hear about all the time about tax depreciation, at least the people that know about it, tell me it really is only worthwhile for new properties. Is that correct?
No, not at all. So we can have properties. Well, I guess really what we need to know is that the effective life for a property is 40 years. So people will always talk to me and say, "Oh, well, my property is 20 years old," and I say, "Well, we're in luck. We've got 20 years of deductions still there." But also we've got older style properties which are past their point. But the reality is, someone somewhere has spent some money on them. So
like a major renovation.
Major renovation. Have we extended an extra 130 square metres on the back? Have we got a pool? We've got patios, new carpet.
Oh, right. Okay. So you could depreciate that extra renovation, extra pool, extra patio, all that.
Exactly.
Okay. So really, I mean, I'm going to say that at the end, but I will say that right now is it's really worth your time to give Christian a call and see whether there's any opportunities for tax depreciation. And as you said, that's a free service anyway, isn't it?
Yeah.
Because you just don't know. I mean, really, all it's going to cost you is a call, is a phone call.
Yeah, that's right.
And maybe 5 minutes of your time.
5 minutes of your time. And the questions aren't too intrusive either. So
really, absolutely. So really, the main message of today is be aware of your tax benefits as an investor. If you don't know what in dollar terms it means to you, give Christian a call.
Yeah, without a doubt. There's lots of money to be saved from apartments. Some apartments you could have around $16,000 worth of deductions in the first year, through to maybe even a small house may still have $2,000 or $3,000 worth of deductions in it. So yeah, definitely give us a call.
No, that's beautiful. So if you are an investor, if you already have one or several properties and you haven't done any tax depreciation schedule on them, you're one of what, 60 or 70% anyway. So now you have no excuses anymore not to do it. So I recommend give Christian a call, or if you're not sure, give me a call as well, because what you want to do is you want to review your portfolio on a regular basis. You want to make sure that I'm going to talk from my point of view now, from the finance point of view, you want to make sure that it still meets your requirements. It provides you with the flexibility that allows you to do what you want to do today, but more importantly in the future. Now, as you know, there's been a lot of changes in the lending investor area, so it's always a good thing to do, to look at your portfolio at least once a year. We can have a chat. I will certainly remind you of the benefits of tax depreciation. But if you want to, you can call Christian directly. I will provide you with all these details in the comments below. So otherwise, you want to give us your... So Christian works for Asset Reports.
Yep.
The website is assetreports.com.au.
That's correct.
And your direct number?
Is 0488 044 322.
You want to repeat that?
0488 044 322.
Great, beautiful. So guys, as I said, you got no more excuses to save on taxes. Imagine what you could do with that extra money you've saved. Now, Christmas is coming up. That could help?
Might help.
Might probably help.
Buy some more shoes.
Absolutely.
Or a jet ski or something, whatever you want to do.
Oh, that's yacht or that holiday. Yeah, no, seriously, have a talk to... I guess you could talk to your accountant and ask if they know anyone, but really you want to talk to a quantity surveyor, someone whose specialty expertise is tax depreciation, because you need to realize that they're the only ones that really are on top of all the regulations and rules. There's been some changes lately about what you can claim and you can't claim, and you'd be amazed as to how much can be claimed. The building, the equipment inside, smoke alarms, all of that. So if that's right. If you want to maximize your tax benefit, talk to a quantity surveyor, and a really good one is this guy here, Christian. Christian, thank you very much for being on the show today. Have a beautiful weekend.
You too,
guys. See you next week.
Thanks.
Bye.